Sometimes we can get as high as 12 for our returns. That is what such massive cash flow that changes our clients' lives. And so number one misconception is too good to be true. Haven't heard of it. I don't know. And then they bring it to their CPA who hadn't heard of it. Now, here's the key. Our CPA tax attorney will talk with their CPA and we'll talk with them and we'll educate them. And they go, oh, I get it now. It's just an installment sale with a third-party trustee. Yeah. So that's really the first thing.
Today I'm sitting with Brett Swarts, and he is the founder of Capital Gains Tax Solution and is the host of Capital Gains Tax Solutions podcast, a national expert in deferred tax trust, DSTs. Brett helps the high net worth individuals defer capital gains taxes on highly appreciated assets, including investment real estate, businesses, and cryptocurrency. He is widely recognized for his expertise in tax strategy, wealth preservation, and real estate investment planning. Brett has been featured across leading financial investment platforms and continues to educate investors, advisors, and business owners in the smarter legal, sound tax deferral strategies. Brett, can you tell me a little bit of a smarter way to defer capital gains?
Yeah. Hey, Pam. Nice to be on the show. Thanks for having me. Smarter, I guess, is in the eye of the beholder, depending on what people are trying to accomplish. I think a lot of people used to just deferring capital gains tax in the real estate world just through the 1031 exchange. And oftentimes that puts people in a box, right? They have to buy within 45 days or identify in 45 days, sell, close in 180 days. So it's just like really short time frames. We call that the shotgun wedding, where you're just running around here on Friday trying to find a deal. And sometimes it works out. Like if you find a great deal, like we love a good 1031 when it makes sense. But oftentimes it's not, because you also have to do equal or greater debt. So you have to sell for, say, 5 million, buy for 5 million. But if you have 3 million of debt, you have to replace that debt. Debt is when the market's either shifting or declining, it's not good to be in debt, especially if interest rates are going higher, right? And that's what we've seen. So the 1031 puts you have to stay in debt, right? And so you have to stay in equal greater value. So oftentimes that's not smart unless you have a great property to buy. So
sure, sometimes it doesn't work for you.
Yeah, you run out of time or you just your goals, you're right. Like a lot of clients want truly passive income. We call it the rich dad, poor dad, fourth quadrant on the right. Yeah. They want to get to a place where their money is just completely given all of their time. They're no longer trading their time for money. So when you have to constantly manage the toilets, the trash, the termites, the liability, the tenant rent laws, and all these things, it's hard to get out of that. And so the dream of this passive income owning real estate is something that is dear to my heart because my parents grew up owning and building real estate. And I was at Marcus and Millage Chap, help people buy and sell multifamily investment real estate. And so I'm a broker by trade. But at a certain point, you've made enough millions and you need to now declutter and get your time and energy back. So this is where I think a better solution is using a trust with an installment sale method to sell, defer tax, and then get passive income just flowing in. Right. And so that's what we specialize in. And oftentimes, yeah, it is a smarter way, but really I would say it's just a more way that aligns more with what people really want.
So it's a little bit more flexible for you in a lot of cases.
Yeah, it's about 100% more flexible, right? Because you don't have to go into the same like kind real estate. You don't have to go back in 45 days to identify. You can get out of debt. You can put it into real estate if you want, which is great. But at any time, you can put it into stocks. You can put it into Bitcoin. You can put it into ground up development. You can put it into debt, real estate debt. You can lend from it. And so it just gives you the ability to diversify at your own timing. But you never have to do toilets, trash, termites ever again. Now, you could also be entrepreneurial and partner with the trust and go ahead and do your next deal. We've had clients do that. So it's not saying that you can't do that, but a lot of our real estate entrepreneur clients want to do it a year or 2 or 3 from now when the market actually shifts. Now we're basically, I think, at the end of kind of a down real estate market. I feel like next year will be uptick. But the last 2-3 years, it's been tough. So that's the point. You want to sell high and buy low. You don't want to sell high and buy 45 days later in the same market. Yeah. That's what the 1031 forces you. Ours gives you the total freedom to buy whenever you want.
Yeah. So it's got a lot of the tools that some of the other programs don't have.
Correct.
So do you have any real examples of what the DST creates in the major tax and liquidity advantages?
Yeah, so we'll do some live deals that have closed recently. We did a $13 million deal in San Diego. It was like a car wash sale. That was a cool one. And they paid off all of their debt, defer all their tax. Their basis was about $4 million. And they were able to diversify and buy the real estate. So that's a nice one. We recently closed around a $40 million sale out of Arizona for a business sale. So this ours also works for businesses, where a 1031 doesn't work for businesses. And we're in the process of looking for investments right now. We did a car auto like detailing company, auto company. We did that one for Massachusetts at $8 million exit. In Texas, we did some land sales where someone owns a ranch for many years and a family recently helped. They bought it like for $200,000, I don't know, 25 years ago.
Yeah.
And then they sold it for about 8 or 9 million. And so it was multiple family members. We set up a trust for each of them and they received their capital there and then they diversified the wealth and now they have this passive income coming in.
Yeah.
So those are just a couple that come to mind, but we've done it for primary homes, apartment complexes. We've done it for car washes. We've done it for luxury primary homes.
And you did say that it would also work for commercial and businesses as well.
Yeah. So businesses is our top one. Business sales. Yeah. It works for, of course, Bitcoin and stock.
Yeah.
So really, here's the key. It needs to have $1 million net proceeds, $1 million gains. So you got to have a big enough sale to really make sense for setting it all up. If it's too small, it doesn't make a lot of sense with the fees and the different things.
That's awesome. And I guess it really does help to have somebody that really knows what they're doing in the DST.
Yeah, of course. Just like you wouldn't go and show up and do a 1031 without a 1031 accommodator to help you, or sell a property without hiring someone like yourself, Pam, to exit,
for sure.
Negotiate the deal. Yeah, you bring in the team member. But it helps that our unique background is that we started in real estate. We practiced it with brokerage, and then we've done lots of 1031s, and we just kept graduating and or leveling up with our expertise to help more of our clients. And so we know every facet of really the real estate world, plus exchanges and adding this tax deferral strategy. Yes, our role as a trustee, but yeah, we work with agents like yourself to help their clients who have big challenges with tax, right? And it helps you guys obviously to win the listings, add more value. Everybody wins because the taxes can be really painful.
How can investors use a DST to unlock diversification, limited freedom, and passive investing?
So
we kind of touched upon it a little bit.
Yeah, we'll talk about how it works, right? So we talked about the what. Mm-hmm. So number one, you exit, right? And the funds go into this trust, and then you get a promissory note is the way this works. And so the trust owes you the money back, Pam, right? If it was your sale. And then you can invest it into different assets. And so we have some like real estate debt funds that are paying about 10%. Mm-hmm. We have some paying about 16%. And let's say it's $1 million or $2 million that goes into the trust, right? You may have been making $50,000 per million on cash flow, but now we increase that to 80 or 90,000 in cash flow because we're going into other assets that are higher producing cash flow. And so you sell, you free up your time, it goes into the trust, and the trust starts paying. Now you pay taxes, you get payments back. Sure. That's part of it, right? Of course. But that's really the two key things we're focusing on: decreasing your time and energy and stress with owning the property, and increasing your cash flow. And that's where the transformation happens, because you get what's called truly passive income. You're actually not managing any toilets, trash, termites, tenants, and you're just collecting checks, right? Every month. And it's more cash flow than you had before. And you're like, wow, this is really great. I have more time and energy to do things I really want to do. Maybe have even more margin to give to the causes I believe in, and I more support my family or whatever it is that your dream is.
Yeah, as you've been talking,
I
keep thinking, wow, it seems like it's truly been a stress relief. That's what I keep thinking. This is very unstressful. Yeah.
Yes, it's a transformation for families, right? So we exist capital gains tax solutions to unlock capital gains to multiply freedom and impact.
Yeah.
And businesses, Bitcoin, real estate, big exits. And the freedom is first for the family to free up their time and the energy from owning the real estate of the business or whatever. And then making a truly passive income, 10, 20, 30, 40, 50,000 a month. And then making an impact for causes they believe in. But there's no forced charity in this. Like, you don't have to give to charity, but we encourage for causes people believe in. Yeah. And then the other thing I'd say is we believe that truly passive income is to your freedom and impact as compounding interest is to your money. And once you really get focused like a laser on 10, 20, 30, 40, 50,000 a month, whatever that number is, that if we could build a plan to exit your assets and then achieve that number and put it on autopilot, it's like this big momentum boost for your wealth and for your life, honestly, because a lot of time and energy is spent owning real estate, managing real estate, even managing the managers who own the real estate or the ranch. Or we did a deal for a gentleman who owns a big ranch in Montana. He had an apartment complex in Utah, and we sold that, and that freed up a huge piece. We did it for a mobile home park owner who had 3 mobile home parks in Idaho, a $10 million sale, and we exited all 3 and did this. And it's just, the stories are all on our YouTube channel, Capital Gains Tax Solutions. And then we also have a podcast on this. And then we also have a Build It to Billions podcast and YouTube channel as well. But that's really the key. Like, the really exercise here is find out what really matters to you the most for your wealth, and then find out what your truly passive income number is, and then get a plan and sell the asset. Most folks are just thinking that if I sell, I have to pay the tax, or sell, or I have to do the 1031 exchange. And there's a better option. That's what we believe, if what I'm saying, it resonates for you.
Yeah, I love that. Whatever works best for you is the way you should go. What strategies ensure that the DST remains fully compliant?
Yeah, more so who's the team that helps to do this, right? Real quick track record, thousands of transactions at this point, close to 30-year track record, over 30 no change audits. And so the law firm who created it does the audit protection, lifetime audit defense for these trusts. And essentially that's a beautiful thing, because you have a track record of attorneys that have done the audits.
Sure.
So that's really important for that piece of it. The compliance part of it, you make sure you report it with your CPA, and we work with your CPA to make sure they report in the proper form. Yeah. The tax attorneys do. That's one of our business partners that do that part of it. Our role is a trustee to help maintain and make sure the tax returns are filed for the trust, and then making sure that the trust pays you back per the promissory note. So those are the main people. There's a tax attorney. There's like the transactional work and the audit defense. And there's the trustee, that's us, who does the ongoing kind of management of the trust. And then we work with financial advisors to invest funds. We work with private real estate groups to also diversify funds. So it's really a team effort. But from your standpoint, it's pretty simple. Once you sell, you report it one time on that year's tax return.
Yep.
And then you get a 1099 for whatever you get back. And you give that to your and then it's pretty much done. Right?
It sounds pretty easy.
Oh, it's so easy, right? And then oftentimes you can shut down all of the entities of what you've sold if you have different assets. So that helps to declutter the whole entity management of your side. And then if you take principal, you'll pay tax on that and you'll report that. But that's really it. And then you can pass it to your kids. Your kids can step into your shoes and continue the deferral. So it can just keep going. And that's why it's so transformational, because it not only increases typically your cash on cash return, but it gives you so much time and energy back.
Well, whatever it takes to make my taxes easier, I'm happy.
Yeah. Bonus.
What kind of misconceptions do people have about the DSTs?
The biggest one is, hey, I haven't heard of this. Well, hasn't my CPA heard of it? And so
that was going to be my next question, is why haven't I heard of this? More so I hear about the 1031 tax exchange. Yep. Why haven't I heard of this?
Yeah. So the simple answer is there's 5,000 qualified intermediate companies, and they're banging the drum of the 1031s. And by all means, I love a 1031. I'm a real estate broker by trade. That's where we started. But that's all they know. They just know 1031, and they just bang the drums everywhere. Yeah. And again, they work great. They give a stepped up basis when you die. If you find a great deal, but baby boomers is really one of our key clients we serve. Like, a lot of them have made their millions. They've made their money. They don't need to appreciate anymore of their assets. They need and want cash flow and no management of the assets. And so the 1031 by nature typically keeps you in this whole cycle. Now, there is an alternative 1031 that's known as a Delaware statutory trust that does give you the passivity, but the returns are typically like around 5%, which doesn't necessarily change people's lives. But you can get to 7, 8, 9, 10. Sometimes we can get as high as 12 for our returns. That is what such massive cash flow that changes our clients' lives. And so, number one misconception is too good to be true. Haven't heard of it. I don't know. And then they bring it to their CPA who hadn't heard of it. Now, here's the key. Our CPA tax attorney will talk with their CPA, and we'll talk with them and we'll educate them. And they go, oh, I get it now. It's just an installment sale with a third-party trustee. Yeah. So that's really the first thing. The second thing would be, there's not a lot of people who know how to do this, just to be honest. There's a few. I started to learn about this in 2009. Right. And it even took me a while to really understand it. And I became a trustee a few years back. And that's what I would say is the best answer for that. And now we have our YouTube channel. We have a best-selling book with Kevin Harrington from Shark Tank that you can read and get on Amazon. It's called Building a Capital Gains Tax Exit Plan.
Put that over just a little bit more, Brett.
Yeah. And basically, this will give you my entire story from basically kind of being where Pam's at as a real estate agent, broker.
Yeah.
And then not knowing about this and then learning about it. And then all of a sudden saying, oh my gosh, if this is real, this is Netflix. And everyone's stuck in Blockbuster. And if Netflix is available, like everyone's got to know about it. But
Everybody wants Netflix, and they no longer want Blockbuster for sure.
I mean, once they know, you don't have to return the movie in 3 days. You don't have to force yourself into
No, they want to be able to flick on that Netflix all the time. Yeah. That's awesome. Now I'm going to be thinking DSTs all the time instead of 1031s.
Yeah, so deferred sales trust. If anyone's wondering what we're referring, so deferred sales trust. We can also save a failing or failed 1031 exchange.
Yeah.
We have the best 1031 exit plan, which gives you a regular 1031, a Delaware option, Delaware 1031, and a deferred sales trust. And sometimes you need 1 or 2 or 3. We had a client who sold a ranch in Texas, $6 million exit, bought a $2 million deal in Oklahoma.
Yep.
Another $1.5 million deal in South Carolina. And then the rest of it went into the trust.
Love that.
So you can do multiple ones. It's not necessarily one or the other. Sometimes the solution to the problem is 3 different tools. But they all
tell me again what the Delaware trust is.
It's basically a 1031 that's packaged in like a Amazon property or a big apartment complex or medical office building. Like, so these are big, beautiful, amazing properties, huge fees, by the way.
Right.
Amazing operators, no control, no liquidity, no diversification, typically around a 5% return. And so we do like them when you have debt over basis issues, which is another complex part of this. If you have debt in excess of your adjusted basis, our strategy is limited for that amount. That's why we bring in a Delaware to replace that debt over adjusted basis. It's just a whole equation thing for tax. But the point is, that's why we use it for that typically.
Okay.
But the reason people don't want to use it is because they have no control, no liquidity, no diversification. Our deferred sales trust, you could put it into the S&P 500, the top companies in the world, and that's it.
Okay, great.
And you have liquidity and you have diversification. And then you can also go back into real estate. Yeah.
Okay, I think we talked about this a little bit, but how to structure an exit plan that maximizes long-term returns.
Yeah, so the big question is, what's your risk tolerance and what's your truly passive income number? So we have done that.
Yep.
And then what's your overall net worth and what are your other income streams that are coming in? So the answer is it all depends. It all depends on a number of things, right? Your risk tolerance, your age, your income that has coming in now, we call it cash flow, tax flow, and debt flow strategy. Yep. And you got to understand each of those. They're each of their own. Most people have a cash flow mindset, but they don't have a tax flow and a debt flow, and they don't know how to bring them all 3 together. And so that's part of what we help work with you and your team to find efficient ways to win for you with your wealth. So that's a part of the answer. We just have to spend some time with you to understand what those answers are and recommend a plan or build a team to recommend a plan.
So how should investors think about tax strategies when selling large assets? What type of planning steps should occur before listing or selling?
Yeah, so our strategy needs to be set up before you close. So in a perfect world, before you even list, you've already built your plan for how you're going to land the plane.
Right.
If you take that plane off and you're in the market and you get all the offers and everything's hot and heavy, and then you got to land that plane. If you land too soon, you're going to pay tax.
Yeah.
But if you take off and we already have another place to land, we'll call it the DST safe island. And this allows you to defer tax, right? And let's land on that runway. So I'd say make sure you have the destination and the plan in place, right? And all of that. And so the cool thing is working with us, we work on a conditional basis. So for any reason it doesn't work out, your plane never gets bought, right? While it's in the air where it's listed, or you don't want to even use the trust, you don't owe us anything, but we literally will build with the legal team, the trust, the planning, everything. And we only get paid if it closes. Kind of like you, Pam, Wonderful. You probably only get paid on the commission if it closes. So we take all the pressure off of that because deals stall or people change their mind or whatever. It's totally fine. No hard feelings. But if you do close, we get paid. Real quick on the fees, 1.5% on the gross sales price is the legal fee, basically. And then 1.25 on anything above $1 million. So the first $1 million is 1.5, then 1.25. So that's the one-time legal fee, covers lifetime audit defense. Our fee as a trustee is about 1.5 to 2% on a recurring annual basis based upon the net proceeds in the trust. Typically includes the financial advisor. Yep. And so that's how we get paid. And that's really it.
That doesn't sound too much to keep things going, or at least in my opinion. If somebody's going to take care of it for me and I don't have to worry about it, then go for it.
Yeah, exactly. What matters to you the most? And most people would say, hey, Brett, 10, 20, 30, 40, 50,000 a month. And let me obviously go through the investments, get a feel for what it is, approve of the investments. I can see it on Schwab. I can see the different things, get it all in place. Yeah. And then it's just like clockwork, right? And then you just set it and forget it.
Yeah,
And we do recurring, we'll do meetings and reviews and all of that thing. You look at the P&L, but as far as your time and your energy, it's really just listing and getting the property sold, and then
time
getting
is
the
money and
position
money is
trust.
time, right?
Yeah.
Yeah, that's the way that goes. What mistakes lead to avoidable tax consequences?
So not planning, right? Again, not having the destination in mind, not having a team that helps you to guide you down this process, waiting to the last minute, not using our best 1031 exit plan that can help you do a regular 1031 or do our option. So going with basically professionals who don't either know this or don't understand it or don't know how to execute it, right? So working with blockbuster professionals versus Netflix professionals, I know the thing, right? So I didn't know. I mean, there's nothing wrong with that. And just, you got to be willing to learn and grow. And that's where I was in 2009. And now we have this expertise and this skill set that again changes families' lives. Yeah. So you got to make sure you're working with the right team.
That's wonderful. That makes me want to learn more about it. But there's professionals out there that will take care of it for me.
You refer, but you'll learn as you get in the meetings and the deal closes, and then all of a sudden you a little bit more. I think it's just knowing your role, right? Knowing like how much and what to answer and what to just bring to the meeting. But yeah, that's how we work. Everyone can learn, and as the deals are going, and we have our YouTube channel with all of our content too.
I like being the person that you come to and I say, I have a guy for that.
There you go. Yeah, exactly.
For sure.
Yeah.
So, Brett, it's been a pleasure talking with you today. Mm-hmm. And let me tell you where to find Brett. You can go to LinkedIn at Brett Swarts, Facebook at Brett Swarts, and Instagram at Brett Swarts. This was
that's spelled Swarts, by the way, for Swarts.
Sorry, Brett.
Someone may not know that. And Brett is BRETT. Yeah, and then capitalgainstaxsolutions.com is the place if you have a live deal or know someone who does. And if you're a business professional, CPA, financial advisor, real estate agent, connect with us as well, because we want to help your clients.
Brett, I will definitely be giving you any people that I have, and we'll give your name out and about. You've been so insightful today on this. Again, I had no idea that this was even out there. Everybody that I know always goes to the 1031. And to me, this seems like such an easier thing to do. But you 100%. Have to have $1 million in.
Yeah, and net proceeds and net gain. So just make sure it's a big enough deal. This is $1 million plus. The bigger the gain, the bigger the number, typically the bigger the tax, typically the bigger the value, right? So $1 million and $1 million. So $1 million net proceeds, $1 million gain per transaction.
Yeah, I love that.
If you had one at 900, we would help, sure. And you have another one at 300, now you have 1.2, that's fine. But you really want to establish that first $1 million as quickly as you can. But if you have like, I got 10 homes that all equal to $1 million, it's not going to be good, because it's 10 different transactions, which increases the cost and it just falls apart.
That's wonderful information. But for anything that you may need, you can always give Brett a call.
Yeah, for capital gains tax. Exactly. Yep.
Yeah, for sure.
Cool. All right, Pam. It's great to be on the show. And thank you for everyone for being on the show.
Thanks for joining us today. And I appreciate it so much, Brett. Thanks a lot.
Thanks. Take care, everybody.
There's always more happening beyond the listing. Stick around and catch the next episode for real talk and insights that help you move smarter and farther in real estate.